Well, good afternoon, everybody, and welcome to the webinar Straight Facts about the PayFacs, what every ISV should know. My name is Pete Uselman, and thanks for taking the time to carve out a few minutes over your lunch hour or the morning or early afternoon, wherever in the world you might be. Appreciate the time to have a chance to talk about the interesting and ever-changing world of integrated payments. Maybe just from an administrative perspective, before we kick off the webinar, just know that you can type any question in the chat that you may have. We should be talking for about 20 minutes, and we'll leave some time at the end for any questions or discussion at the end of the presentation. Today, what is our objective? Well, today we want to provide you with an unbiased information you can use to really help determine your optimal payment integration strategy for your business and ultimately how that will help flow down to your customers. Really just from an introductory perspective, payments and software are really converging on each other, and more merchants and businesses are looking for integrated solutions really to drive efficiency, drive various operational benefits for their organizations, and payment is obviously the lifeblood of cash flow for them. And so over the last 10 or so years, we've seen a remarkable growth in terms of how payment companies and software companies are really working together, and what some of the different models are of how those shake out. So really we want to help really lay out roles and responsibilities, help you get a better understanding for what those models are. And payment facilitation is certainly a growing and I'll call it buzzy topic in the world of integrated payments, and want to help everyone out there really continue to kind of understand what the impact would that be for your specific software company that you work. Just real quick from an introductory perspective, our company and me, again, my name is Pete Uselman. Our company, Wind River Financial, is a payments company, so we offer both integrated payment solutions for software providers as well as direct solutions to end businesses that want to accept those payments. We're based up in Madison, Wisconsin. We're family owned, privately held, have been that way for 25 years since we were founded in '99, and intend to be that for the long term. Again, my specific role is I work in our integrated payments channel manager, so I don't as much sit on the sales side as more have the pleasure of working with our growing number of customers that have built integrations to us to kind of route payments within their different software solutions. I joined the company in 2012 now, so going on 11 years. And I'm actually the son of one of the co-founders, Matt Uselman, and the second generation family member of the ownership group. So thanks again for letting us introduce ourselves and just taking the time. So really, I think a growing number of ways and a couple models we wanted to touch on and primarily focus on that PayFac or payment facilitator as a service partner. But we're really seeing software companies and payment providers work in really three primary ways. One we'll talk the most about, which is called the payment facilitator or PayFac. The second we see is really more of like a white label payment program offered by a payment provider. And the third model is really more of a shared sales payment program. So in order to kind of help you contrast and understand that lay of the land, those are really the three main models available out there. A PayFac. So, maybe just as a level setting, a PayFac is really a company that enables other businesses to accept card payments as sub-merchants under their own single merchant ID. So really what the experience that a payment facilitator is trying to deliver for their end customers is really acceleration and centered around user experience. So user experience for your specific customers. So a software company might want to go in and say, hey, we want to provide a more seamless onboarding experience. We want to receive settlements of transactions proceeds from an acquirer and really manage those disbursements of payments out. And then ultimately really have more control over the entire process in terms of how payments are delivered to your customers. So really, I would just say there's really two flavors of payment facilitation. One is becoming a direct payment facilitator. The other is really a payment facilitator as a service model, where you as a software company could really partner with a specific payment facilitator that's already established, really to get the benefits of some of these user experiences that we'll talk about without having to go through the full, I'll call it rigmarole or compliance burden or initial setup of really what's required to be a payment facilitator. So for today, we'll focus on that PayFac as a service piece, or really, again, partnering with a payment provider to deliver some of those experiences, as well as contrasting that with some of those other models we previously touched on. So a PayFac as a service, really, from our perspective, we think it makes sense to organize this in terms of, what is the partner, the payment provider doing? What is the SaaS or ISV? I should mention, we reference that in our industry as independent software vendor. And then the end customers of the SaaS or ISV, and what are some of those different user experiences that are determined on these specific models that we're talking about. So what a PayFac as a service company is really doing is aggregating all volume directly within one merchant account, or we often refer to it as an MID in our industry. That PayFac as a service company is really looking at your specific software company, what market it serves, what's the type of payments you want to accept, what's the time outstanding for those payments. So really underwriting or looking at that SaaS company or service provider as a whole, as opposed to some of the underlying individual merchants. Obviously, there's some risk that's being managed by the payment facilitator as a service that could have an impact to you as a software company in terms of, again, some of those things I just mentioned before, time of settlement, things like what type of businesses or market are you serving in? Is there risk presented by things such as advanced sales, or potential loss of funds due to things like chargebacks, or solvency issues at that specific segment of market that your software actually serves. Again, what we see is sometimes the PayFac as a service company offers a shared risk model where the software company is really inserting themselves into that chain of risk management. Again, in terms of could be guarded against things like revenue share or potentially offsetting any revenue you might generate from offering payments as a service within your software. So that's something we like to call out and just kind of be mindful of being aware of really, are you being asked to take on or share risks as part of your underwriting with the PayFac as a service company. Again, your PayFac as a service provider, should you be providing you some tools, again, to manage things like KYC, which is Know Your Customer, or AML, BSL, which is like the Anti-Money Laundering Act, as well as the Bank Secrecy Act, that will help, really make sure you have your I's dotted and T's crossed from a federal regulation standpoint in terms of banking. Once PayFac as a service really underwrites SaaS, they can really streamline or board that as many what are called sub-merchants, or almost like stakeholders of that main merchant account that is really receiving all of the aggregated funds from that specific PayFac provider. Really, when we get into kind of some of the benefits, looking at streamlining onboarding, which is really the number one pain point that we hear in terms of a lot of software companies that we're talking to, saying, hey, we're looking for easier, faster ways really to drive our customers to onboard. So we'll talk a little bit about the end in terms of like strategy and what model might make sense over a different one. but really a user experience in terms of onboarding is a huge benefit of being a PayFac as a service, or partnering with a PayFac as a service provider to deliver payments. What we often see is a lot of customers or SaaSes that go through wanting to be a PayFac are really looking to retain branding and control. So, X software payments or X software payments powered by a payment provider is a pretty common kind of branding, but something to kind of give some thought into in terms of, how much you want to, control. Closely handled with that is obviously the sales and service. With a PayFac, we see more of a self-service or enablement of people to self-enroll or get signed up automatically with their service, as opposed to working with a sales rep and having them explain things. Again, with that becomes a greater monetization point for the SaaS company in terms of setting the fees to the merchants or the ability to generate additional return on the integration work that you've elected to do as a software company. From a SaaS perspective, or from a PayFac as a service perspective, it's pretty transparent to merchants what model they're on, or even if they're onboarding with a PayFac as a service. However, some things they might notice or benefits they might experience are a little bit more simpler, straightforward boarding, again, because a lot of that underwriting is done at the SaaS level, and a lot of that risk assessment is done at that SaaS level. Again, understanding and working with your PayFac as a service provider to understand what type of business you serve, what are some traditional funding times, all those inputs, chargeback history, all those things that potentially go into making acquirers or payment providers nervous about managing the risk that comes with taking payments. So at a very, very high level, I think, and we'll have a chart to summarize all these different user experiences at the end. A lot of this is founded on, initial onboarding simplification, as well as unique fund disbursements. Again, being some rules allowing you to do some things like split funding or moving deposits around a little bit more that maybe aren't present with specific merchant accounts. It's also, to understand PayFac, it's also helpful to kind of compare them to some of the other strategies or models out there. And so, again, maybe taking a look at a very other common model, which is something we refer to as a white label, where you can still obtain a lot of the benefits of software or as a PayFac as a service, without necessarily having to go through some of the upfront underwriting, or depending on how much you as a provider really want to take on from a service and support standpoint, and as well as the maybe need that your customers have in terms of onboarding onto your solution from a payment perspective. So unlike a PayFac as a service, a white label is not an aggregated account. It's really each of your customers have a unique merchant account or MID that they would have on file with that underlying processor or acquirer. Again, in this scenario, the white label payment provider will still assume the risk and most likely not pass that on to the software company or SaaS provider. They'll still, again, help you or enable or provide tools to manage those different KYC and anti-money laundering rules, as well as share revenue. But again, the big difference is some limitations in terms of fund disbursements and in terms of a little bit different of an onboarding experience, meaning you're not underwritten as a whole as a software company with most of your customers looking like, a specific example. Each one could be a little bit different. So if your solution is maybe a little bit more horizontal as opposed to, a vertically, application, which there are certainly a number of horizontal solutions out there that maybe be more agnostic billing or, have some type of billing component that serves businesses in lots of different industries. This might be a path that you want to go down where you can still get a large number of benefits of that PayFac as a service. There are still some tools in place that you could implement or work with your provider really to embed enrollment forms and merchant applications directly in your solution really to accomplish. But from a pure aggregation standpoint, these funds are separated. Typically, with a more traditional model, there's a more standard underwriting and risk assessment that your customers would end up going through that typically we say takes about 1 to 2 business days in terms of actually underwriting. And so again, those funds are settled directly from that payment processor right to your end customer. Again, still a very good opportunity from a monetization standpoint for SaaS providers to set pricing, control the experience, really sell the payment experience on their own. And again, we see this being more of a fit for larger organizations that really want to have more control, but maybe need their customer or have a sales rep or somebody involved guiding their customer through the process. Maybe it's a little bit, larger a customer. It's a more complex software implementation, and they still want somebody involved really to hold their hand and really explain things or provide more service. Lastly, when you compare it to a sale, what we refer to as a shared sales payment program, a lot of very similar aspects of this to white label from a funding and settlement perspective, meaning each of your customers in a shared sales model would still have their own merchant account where they would be able to receive funds directly through that, again, not aggregated. However, there's some software companies out there that have said, hey, we don't want to be experts in payments. We want to have a good partner that we trust and treats our customers fair, but we want you to handle everything. So maybe there's some type of strategy, that evolves in terms of how referrals are passed over and how that product is really rolled out. But they're really, referring to or partnering with somebody to let them be, the expert, explain pricing, explain funding, explain customer service, explain features within the gateway and how they really react or impact, I should say, their different solutions. I would just say a couple of things. That model is probably typically more reserved for people that are newer to payments that again, or maybe some that have taken the approach, hey, our software does a ton. We don't really want to take the path to really get fully into payments, but yet we understand that it's an important part of our customer's life from a onboarding and cash flow perspective. So that's certainly an opportunity, for those that don't want to go down that path. We typically see more of wanting to take on a sales model, shared sales model. Within shared sales, obviously that payment provider that you're partnering with will set pricing. They will take on 100% ownership of all the KYC rules and compliance checks. They'll 100% assume the risk for underwriting as well as any downstream, chargeback or solvency risk that presents itself within your respective customers. There is some element of a revenue share still present with shared sales models. However, often typically lighter or lesser than the previous two models where the software provider is taking on more of an active role in, either enabling their customer to self-serve through the process or, providing a direct resource in-house at your software company to really guide that company through the process. We hear a lot of questions around is PayFac the right strategy for our business? I mean, there's no doubt we get subscribed to all the industry communications just like everyone on this call. And, I feel like 7 out of 10 emails we get or things have PayFac on it. And so it's certainly got a lot of eyes and ears on it. And there's a lot of buzz. My general sense is there are many, many more companies that have decided to go with a shared sales or white label model because of maybe more of the complexities involved. And really, it kind of gets back to your question of, is this the right strategy for your business? So we really see kind of two criteria that we recommend. Again, one is infrastructure and resources. Is really, this payments should really be an ROI for you and your business. Understanding how much, number one, what capability do you have? Do you have an expert on your staff that could really own payments, or train your staff in terms of being that SME or system or subject matter expert, that could be a resource for your company. Obviously, another big category would really be expertise around service and support. So a general guideline that we like to tell people is I haven't really seen it work well or implemented successfully if a company has been brand new to payments and gone down the payment PayFac model. So I really see an evolution where customers, or software companies really begin to integrate payments or add something to their software. They want to take an approach of, hey, we want to get to know the business. There's a shared sales approach. Over time, they might get more and more experience, understand the revenue impact to their business and what that means from an ROI perspective that will allow them to grow into either one of the two other models we discussed, which is white label or PayFac. So this is really just a summary. We can send this deck out as a follow-up to this call, but I think just looking at some of the different user experiences might be helpful for you just to kind of refer back as you're determining or exploring some of your strategies within your specific business, just kind of meant to be a high-level summary slide for you to reference back. I would just say lastly, I think just something to think about in terms of a takeaway from the call is strategy and how important that is aligned with what you want to do in terms of integrating other products like payments. So I think, a couple of questions maybe to think about. Again, we talked about this earlier, but what type of customer experience are you looking to deliver? Again, is it speed driven, self-service, relationship driven, something else? That is a pretty good starting point, I think, for determining, is PayFac as a service something you wanted to go down or a path you want to go down? And then, who are your customers and where are they going? And how is your product evolving to help them? So, do they require direct engagement? A thing that often gets lost in a lot of our discussions is how do you build relationships, with your customers? And that may or may not be part of your model. There's no really right or wrong answer. But I think those are some of the things, just from a pure user experience standpoint, that we're really, asking people to think about or could help, really determine what model that you really want to go down. So thank you again. We'll take some time for questions, but just really appreciate the 20 or so minutes that we had today to get together. We'll stay on the call for a few more minutes yet just to see if there is any questions. And I think my colleague Brenna will read those to me now.
Hey, Pete, can you hear me?
I can.
Okay, so quick question. Does the PayFac as a service provider, do they handle any customer support for the SaaS or for their merchants?
I would say typically no. They would really be more of a level 2 support, meaning they would really lean on the software provider to be the level 1 to the customer, depending on the severity of the problem or the question. Obviously, they should be providing a resource to you in the form of somebody like me or a contact support, experienced person to really solve the problem. But that's, again, one of the trade-offs, really from a PayFac perspective is pushing off a lot of that responsibility onto the software provider. That's a really good question, though.
Okay, one more question. Which model do most of the software companies that you work with, what do they use and why do you think that is?
Yeah, good question. Most of our customers are today, we have customers in all three. I would say shared sales is probably the most common that we still see. I mean, again, I mentioned this before, but the content being sent out is a little bit behind kind of what's actually being implemented. There are no doubt some very large software companies out in the industry, and again, talking about processing north of $10 billion in annual payment volume, that have very well successfully implemented being a direct PayFac or either a PayFac as a service. But for the most part, what I see is really a lot of companies out there saying, look, this is important to us. We want to make sure our customers have a good experience, but we have so much going on. And, so we really want to outsource that piece of it. And again, there's not really a right or wrong answer. It's just kind of back to that strategy question around what experience you're trying to deliver and, how you really, want to engage or interact with your customers. We do have a large number of white label providers as well. And I will say this, all 100% of them, I'll call it graduated or, kind of began as, more of a shared sales and then kind of got comfortable or, familiar with that. They got comfortable with the revenue. They got comfortable answering a lot of the questions. And they saw that as the next strategic kind of step in the evolution for their platform. And so, not as much sensitivity there around, white label from the perspective my customers can't know who this is. But again, it's more of an evolution of taking that on within the current more structure of funding and acquiring roles, I'll say. So that's a really good question.
Okay, one more that came in. Are all models compatible with SaaS merchants that have card present transactions in addition to card not present transactions?
That's a super good question. Yes, I would say the channels are all available, within each. So you can, whether you're integrating e-commerce via a hosted payment page or, some type of keyed, Moto or manual entry side, if you're like an ERP or you want to call someone and take a payment, or you're using some type of tokenization for recurring or, automated billing. And then, yeah, on the card present side as well. That's just another payment channel that really can be incorporated into any of those models. That's a really good question that would, maybe be a topic for a different day, or if you're curious, whoever asked that question, depending on what you're trying to do, feel free to ping me or reach out to me, on that if you have a deeper question there. But I look at
Okay.
that as like it's a payment channel that would fit, within each of the three models.
Last one, can I deliver a seamless experience with a shared sales or white label model?
That's a good question. I think I know what you're getting at. I have a follow-up question I probably can't ask you, but when you say seamless experience, I'm kind of reading into that like you more want to self-serve. And so that certainly can be done well from my perspective with the other two models. Again, I mean, just the feedback we get from the industry, and I'll just be super direct, is it's a lot of legacy out there, right? Like, oh, I got to fill out this form. I got to call this person. I got to, it's super manual. So if it's done right, and I think if you have a good relationship with your payment provider, it could be implemented successfully. If you're looking for a true, like, I don't want to touch it, I just want it to kind of flow through the system automatically, the PayFac as a service could be the best route for you. That would provide some additional functionality in terms of onboarding and really being able to be globally underwritten at your individual software level. But I think there are ways, and this is kind of a lame answer, but depending on your industry, what type of use case you have, some of those things, it could be implemented successfully. And we have some case studies and stuff on our site if you're interested in talking about that, that could speak a little bit more to more of a seamless experience or frictionless, however you want to say it. But I know what you're saying. I think I know what you're saying through Brenna's question that, by seamless, but I hope I answered your question.
All right, that looks like all of them.
Awesome. My phone number and email are up there. If you ever want to chat, be happy to do so. But until next time, we very, very much appreciate your time and thank you very much for taking the time to talk this afternoon.